Hey folks, Dan Frio here, the rate update. Today is August 13th, Friday the 13th. We're going to talk about, does it make sense to rent right now? Or should you buy in this crazy market? Don't go away, we're going to talk about that next. So you thought the housing market is crazy where you live? Why don't you check out what's happening in the rental market? Check this out.
Demand for rentals is now off the charts, both apartments and single-family homes. That has landlords seeing bidding wars and dollar signs normally reserved for home buyers.
We've been leasing property for almost 20 years, and we haven't seen an applicant pool this competitive since we've started.
Vipin Motwani put this Clinton, Maryland townhouse on the rental market just a few weeks ago and had 20 showings and 10 offers. Potential tenants are offering several $100s a month over asking price, and landlords are following suit. In July, rents nationally rose 7% year over year for one-bedroom apartments and 8.7% for two-bedroom apartments. That's up from 5 and 6.5% annual gains in June. That's all according to Zumper. Now, for single-family rentals, the latest read from CoreLogic in May shows rents up 6.6% year over year. That's nearly 4 times the annual increase in May of 2020. Not only is the rent rising, but so too is the profile of today's renter.
The rental applications that we're getting right now, you're seeing higher credit scores, you're seeing applicants willing to put down more in terms of security deposit. You're seeing strong rental history as well. That wasn't necessarily the case pre-COVID.
He's seeing a lot of renters who were trying to buy homes but were priced out and decided to rent instead. With home prices still skyrocketing and the supply of homes for sale improving only very slightly, there's unlikely to be any relief for renters anytime soon. Dom?
All right, so this is fascinating to me because, you know, I'm a landlord myself, and so I kind of follow these dynamics. How exactly, though, is the eviction crisis that we're talking about right now playing into rents and competition for homes and apartments? We've heard a lot of stories about landlords not liking the fact that these eviction moratoriums are still in place. They are trying to take advantage of some of these rent markets, if you will. What exactly is the dynamic there?
Well, it's really supply and demand. If you have renters who aren't paying the rent and you can't turn over that property, that's taking out of that supply that you need for all those renters coming in who do have the cash to pay. And you have also demographics coming in, millennials and other people who are moving out of their parents' homes. The job market is getting better again, so they want places to live. So there's so much demand out there and so little supply. And of those renters who aren't able to be evicted right now, those landlords can't turn over those properties to new renters. They have less supply. More demand just means higher prices.
Of course, it's a very tough spot for a lot of renters out there for sure.
Okay, so that was great information. Might not be what you wanted to hear, but the housing market, there's a huge shortage of homes. That's what people don't get. There's about 4 million less homes than there should be. And now we also have millennials that are coming out of the woodworks, out of the basements, looking for homes. And now you have people that's been stuck in the COVID stuff and they're like, I'm going bonkers. I need to get into my own home. I need a bigger home. I need to get out of the city and so forth. So let's go over kind of what's going on in the housing market, but then let's also decide, is now a good time to buy or should we kick the can down maybe next year? Will the market cool off? So let's dig in that market. So the bidding wars erupt for renters as the economy recovers in the hot housing market. Well, rents have increased in July. This is a report from last month, but this news is just out. In July, rents nationally rose 7% year over year, and two-bedroom apartments went up 8.7%. Okay, so just think of that. So that market is hugely saturated and the prices are going up and people are the landlords are raising rates because they can. Okay, so now the thought is, well, wonder if I wait until next year. Is that a good strategy? Well, maybe not. So let's debunk this and see why now would be a good time versus later. First, what are interest rates going to do? Well, if you watch this channel on a daily basis, we kind of know that rates are going to go up. Why? Inflation's going up and the jobs market is getting better. So rates are still almost at historic lows. They're still in the high twos, and low threes. But what's expected for next year? Well, 4.3%. That is not me. That's the Mortgage Bankers Association. Okay, they're predicting that they'll be about 4.3. So about 1% higher than where we are now. So do you wait and have to pay a higher rate? That'll probably put, maybe an extra $100 on that payment, maybe 100, 150. That's one thought. The next thing is, will the housing supply be as tight as it is now? Yep. There will be houses that come on the market because of the forbearance, but there's not going to be that much to kind of suck up all the demand, because the demand is way outpacing supply. So is it going to stay tight? I think it's going to stay tight, might loosen just a little bit, but not enough to make a huge difference. Demand, will it stay strong? You bet it's going to stay strong, because as more and more people get back into the workforce, more and more, I'll say it, moms, and I'm not trying to be sexist, I'll just use that generically, or the parent that's staying home with the child. You have a child that's in second or third grade that wasn't going to school, you had to stay home with them. But now you have people going back into the workforce, in the tunes of millions of people going back into the workforce. So the demand is going to stay as strong, if not stronger. All right. And then we go down, how to increase your odds of becoming a homeowner. Okay. One of the things that I strive here is to teach everybody about their credit. And I have multiple videos. Check out my YouTube channel to find out all of that. Generate more cash. That's hard to do right now, but destroy some of that debt. While you're still maybe living in mom and dad's basement, maybe you're still renting, try as hard as you can maybe to tighten up your buckle a little bit and start to try to consolidate or pay off some bills to get you situated for to be in a better financial situation. Let me just dig in real quick about this credit scores. It's amazing how a lot of people, they strive to get a perfect credit score, but they don't realize the ramifications of your credit scores. Your credit score can impact your rate by over 1 full percent. So if you have a really bad credit score versus a really good credit score, you might be looking, like I said, in the tune of at least 1% on that rate. That 1% can really add up when you're looking to buy houses. Okay, so I did some research and I found that the average rent rate now on a 2-bedroom apartment is $1,972. So what I did is I pre-referenced this information and I put in, if I'm looking to buy a $250,000 home with 3% down, that's my first time home buyer program. You don't need $100,000 down. You don't need 20% down. First-time homebuyers can get in with as low as 3%, unless you're looking at a VA loan, which is 0, or maybe an USDA loan, which is also 0. Okay, so but if you're looking to put 3% down, you're looking at $7,500. 30-year term, I put in a rate right now at 3.25. It might be a little bit lower than that, might be a little bit higher than that, but this is a good estimate to use right now. Annual taxes, 1.25, it's already preloaded, so at $3,125, and annual insurance is $900. What does that do to my payment? $1,572. Okay, $1,572. The average 2-bedroom home in the country is at $1,972, and it's going up in the tune of 8 to 10% a year. Well, let's just, for kicks, let's see, how about if I buy a $300,000 home with 3% down, okay? And everything else is the same. I'm still $100 less than the national average if you're looking to rent. It's nuts, okay? So that's kind of, I hope I'm debunking the thought process of, I'm going to sit on the sidelines right now and wait, because it's not going to get any better in the next year. Now, if you're looking 2, 3, 4 years out, I don't know what that's going to bring. But right now, if that's what you're looking to do, you're contemplating buying a house, I wouldn't kick the can down the road, because I don't see it getting any better. All right, so now let's get on to what's going on with mortgage rates for today. And this is the primary reason people watch my videos every day. So let's get on to what the markets are doing right now, so I can give you some guidance on what we're looking at in regards to mortgage rates. Right now, we have the MBS market up 27 points. Guys, what do we know about the MBS market for those out there that watch me daily? If the price goes up, mortgage rates come down. Nice move today. So why do we focus in on this number? This is for the newbies out there real quick. This number represents what's happening to the price of a mortgage-backed security. It's the bond that trades on Wall Street that is the biggest factor or component of your mortgage rate. Okay, as this number goes up, you pay more for the bond. That causes the yield, or in this case, your mortgage rate, to go down. Okay, so this is what's been happening for the last quarter. You can see last week or this week, we've kind of cratered. And again, remember guys, when this goes down, rates are going up. All right, so what happened right here and then? Well, if you go back to my videos, please go back a week or two and just try to debunk me if you would. I referenced and said we topped out, meaning I said rates are too low. Yes, I said they're too low. Why? Because I thought the MBS market should be right in this range here. Okay, when we exceeded that range, remember, going up, rates are getting better. So when we surpassed the 101.8 target, I was like, things are overvalued. So I'm going to sit on the sidelines right now. I'm not going to lock anybody, but I'm going to wait for this to turn. Think of a stock, okay? If this was a stock and you're watching it go up and up and up and up and up, you're most likely saying, I'm not going to sell because I might miss this huge run. I might be in this part of the cycle of this run. What I'm going to do is I'm going to monitor this, and when I see it turn and make a substantial turn that I know it's going to really start to drop, I'll then go in and buy. That's what I do with my clients. I monitor this on basically a tick-by-tick basis so I can lock you in at the perfect time. So what I did right here and then, right in this time frame here, I actually posted a video and said, guys, we are overbought, meaning rates are too low. I'm expecting us to taper down into this region here. Well, we oversold. We overshot. Like anything else, the markets usually overcorrect or they overrun. That's what we're seeing. I'm expecting the market to rally back up to about 101.8 figure, and we're getting there. We're about 50 basis points less. But look at this debacle that we saw right here. Okay, the fear of inflation ticked back up, and the fear of tapering, the Federal Reserve tapering their mortgage-backed security purchases. That's a video for another day. So what also happened this week that might have caused this drop in prices of the bond? Well, we had some things come out, and like the consumer price index and so forth. But the one of the biggest things that people have been paying attention to is the producer price index. This is what the Federal Reserve monitors to see what's going on with the inflation pressures. And they basically said the consensus was we should be about 5.6% inflation. We're at 6.2. It was running hotter. But the Fed is sitting on the sideline saying, we really don't care right now about that. We're going to, and we're going to do it basically pretty quick and fast and robust when we do make some moves, but we're mainly focused in on the jobs report. And this week we also saw the jobs report actually come in better than expected, and those two things coupled together is what caused the market to drop. Okay, what happened was the Fed's coming in saying, we might stop or reduce our purchases of mortgage-backed securities because the economy is getting better, the job numbers are getting better. Now, what happened today on today's economic calendar? Not too much. Import prices aren't going to affect the market, and nothing else should affect the markets. So what did the day look like? Okay, we opened the gates, we spiked way up, which is awesome, and we stayed there. The benefits that I see here, or the positives I see here, all these green candlesticks. Green candlesticks means there's more buyers in the market than sellers. That's great for us because we want the prices to keep pushing up. So we want more and more buyers in the market, and you're seeing that right here. And we're ending the week on a nice little note here, a nice little positive uptick plus green candlesticks. So that's where we are there. Now, what are rates looking like right now? Well, I get this report from Black Knight every day. It's a consensus of where mortgage lenders are throughout the entire country with their 30-year rates. Here's where the analysis is right here. So you might say, Dan, this rate is much better than I'm getting. Well, there might be a reason for that. You might say, well, I'm getting a much better rate than this. Well, there might be a reason for that too, but this should at least give you an idea where you should be, okay? So with 30-year conforming jumbo, FHA, and VA, our rate here. 1 day, 7 day, and 4 week delta. Delta means change. So the change from yesterday to today is basically zero. 0 basis points is obviously zero, but let's go over here. 9 basis points represents 0.09 in this number over here. So the 7 day delta means actually this rate at the beginning of the week or 7 days ago was 3 because it's up 9 basis points, bringing it now to 3.09. Okay, so you can see that and see the deltas. There's not really much variance in delta here, but the 4 week delta, we used to be at about an 1/8 across the board. Now we're basically at 0. So that means rates have tapered back up to where we were a month ago. And you can see that on the chart up here. So that's where I think well, that's not where I think, that's where we are right now. So if you like what I'm doing, you like, what you hear, and you just want to seek some guidance, you need pre-approved. You need to figure out how much house you can afford. You need to know, hey, Dan, do you have any down payment programs maybe possible? Can I get away with, this amount down? We'd love to answer any and all those questions you have. My average loan officer here has been in the business for about 20 years. So there's a lot of experience. We offer programs for people all over the country. We do loans from FHA, VA, USDA loans, conventional, jumbos, reverses, everything that you possibly need to get into a home, we can offer that to you. So how do you find out more about me and my team? First, I'd like to ask you, give me a thumbs up. I truly appreciate that. Subscribe down below, hit the bell every time I post a video, you get an alert. But the best way to reach out to us is this. We're going to go back to my website, and that's where I ran these numbers to give you the mortgage calculation. Go back to my website. It's therateupdate.com, and there's multiple ways to get a hold of us. If you're like, hey, I just want to get the ball rolling and apply, just click the apply now button. If you want to talk to us, a lot of people are like, you know what, Dan, I really want to talk my way through this with somebody to get on a right path. Well, give us a call at 844-775-LOAN. If you're watching this in the evenings, maybe on weekends, and nobody's here, please do me a favor. Schedule an appointment. Click schedule a meeting. It'll open up our calendar. It'll provide you the days and times that we have available. It'll also ask you, do you want to do this by Zoom or by phone call? I love doing it by Zoom because we can meet you guys. We can go over any documentation that you might have that's in question, or anything else to give it more of a personal feel. But if you'd like to do this by phone, that is fine as well. So that is it for this Friday. Thank you so much for watching. God bless, be safe, and I'll see you Monday. Bye-bye.